Almost good afternoon to everybody. Why don't we have our panelists come on up here and get situated? And what a great setup for this conversation we're going to have here about the investment side of this energy. I like transformation or evolution more than transition. So we've got some fantastic panelists here, and we're going to set the stage keying off of the last presentation about energy demand and supply on a global basis. And so without further ado, I want to introduce this fantastic panel here to my left. And starting first, we have Vandana, Vann for short. Yep. Vann, thank you. Gupta, Vice President of Asset Development at Brookfield Renewable. And then next to her, we have Thania Burningham, Senior Manager of Project Finance from AES Clean Energy. And of course, at the end there, Mike Umbro, Principal with FieldView Capital. So let me just get the stage set here. All of you help arrange financing for projects that people in this room either own or operate. And so that means you are key intermediaries between the sources of capital on a global basis and the people who actually get the projects done and put the shovels in the ground, the engineers who design the projects, and the communities, hopefully, that benefit from them, which is ultimately what we're all about in Kern County, is improving our community by providing quality jobs and lifting up communities. Goldman Sachs estimates that the world needs $16 trillion of cumulative investment in energy production between now and the year 2030. So that's not even going out to 2040 or 2045 that we often reference because of some of those climate goals that we have. So what does that mean? It means that we actually need to be investing $1 trillion more each year between now and 2030 in order to reach those goals compared to our current rate. Everyone in the room here either has capital or needs capital, right? So when Lorelei and I were talking about this event, you said, we've done a good job of getting to work with and support our oil and gas industry and our solar and wind industry here. They're the ones who have needed capital. They're the ones who build the projects. But, maybe we can do a better job reaching the investor community. And so that's the theme for our conversation this morning. The other backdrop, of course, is that the world of ESG investing is pushing capital towards renewables. And you can see the evidence of this in three things. Number one, shareholder proposals to public companies on climate-related matters. There were about 40 of those in 2012. Last year, there were over 170 of them, and most significantly, it was the first time that the majority of them were receiving 50% support from shareholders. Number two, the internal rate of return on solar and wind projects for major projects has been in the low single digits, 5 to 6%, and you might be able to speak differently to that from your perspectives. And because so much investment is being pushed towards renewables, the IRRs in oil and gas projects are now 20 to 25%. These are figures from Goldman Sachs. Third thing, there's over $100 trillion of global assets under management that are now aligned with the UN Principles for Responsible Investment. So unfortunately, when you put all these things together, our last speaker actually touched right on this, that means that we're underinvesting in energy production in general. And it means that we're now seeing energy become less affordable and less reliable, which hurts communities. And we're also not investing enough in climate and renewables, and that also hurts communities. So investors and capital have to really step up and help address both of those issues. But not to fear, Kern County is here. And we have an all-of-the-above mindset. So first question, I'm going to start with Vann. How do we attract the capital to Kern County to build this energy future?
Hi, everyone. It's great to be here. I would say you're already doing it. So Brookfield's just raised a $15 billion fund, the Brookfield Global Transition Fund, that is focused on impact investing. And we are pleased to have announced our first partnership with CRC, and we're investing directly into Kern County. From our perspective, you all are leaders in the industry. You've been in the energy industry for over 100 years. You've got the technical expertise, you've got the operational expertise, you've got the resources, the natural resources, and you are in the state of California. So we've got great incentives, both at the state level, as well as now, thanks to the IRA, the federal level. So all things point towards tremendous investment in Kern County. I was very pleased to hear Lorelei say that we're working on permitting. That does tend to be one of the things that scares investors most about California. I have a few projects in my team that have gotten, not in Kern County, but gotten stuck in permitting in California. So that's something that we really have to fix. But with that fix, Kern County is a place that should attract tremendous amount of capital over time.
Thania, same question to you. When you're talking to investors, how can Kern County do a better job of speaking to them by supporting people like yourself or through other means?
So I echo what you just said. I think you guys are already, Kern County in general is already doing everything that's necessary in order to attract investors into the county. The majority of issues come from a permitting timeline, right? You want to have clear requirements, a clear timeline that will de-risk the project, because that's really what everyone is looking for, is taking away that binary risk that comes from investing in a new place or a new project or a new technology. I also think that it's very forward-thinking to think about the energy transition and be commercially minded to get the projects online and be able to get to the finish line, which I think we're already working towards that in partnership with Kern County. And then lastly, I think proof of concept, right? As you mentioned, 100 years in the energy industry, there's proof of concept here. And that attracts investors and de-risks the project. And so I think those are really the main items that people focus on when thinking about investing in a new location or a new project.
So let's maybe take that note of proof of concept. Mike was expecting the same question, but now I'm going to give him a different one.
That's all right.
So given that proof of concept investing is inherently a higher risk proposition from an investor perspective, who are the types of investors that are going to be willing to write those early stage checks to bet on the new technologies? And I think Lorelei said earlier, we don't know what all the technologies are going to be, but we just want a lot of them to be piloted here in our carbon management business park. So who's the investor group that you guys talk to that's going to be interested in that proposition?
I think there's a growing pool of those investors. You have traditional private equity investors in oil and gas that are looking for ways to transition their portfolios. And you hear that all the time. Typically the oil and gas shops are out in Texas, Houston, Dallas. They're willing to come here, but on the proof of technology, they're only going to be able to rely on a proven management team. So because we have these unproven technologies that we're trying to roll out into integrating with the grid or producing energy as clean oil and gas operations or whatever the case is, those private equity investors need a proven management team. And I think that bodes well for folks in Kern County, because if you're not from Kern County, good luck trying to figure out how to play in California. It is a huge hill to climb. It's insane. It really is. But to do it, you have to have the engineers that have been here with their careers at Independence, and many of them are in this room. And it's going to take more than just Chevron, Era, and CRC and the renewable folks doing this. We need to really lift up the independent leaders to show the investor community, hey, the talent is here. We're not asking you to bring talent. We have the talent you can tap into. We need some fuel behind us to make it go, and that fuel is capital.
Thania or Vann, you want to add to that? So I've heard proven management teams, private equity is going to be willing to write some of these checks. Are there any other groups that?
Yeah, what I would say about technology advances is that's where we really need to lean on the federal government. And the DOE is doing that now with the $60 billion that they've just committed through both the Infrastructure Act earlier this year and then the Inflation Reduction Act. Out of that capital, there's about $60 billion that's earmarked for carbon capture and technologies around carbon capture, and I include in that transportation, I include in that, hydrogen. You've really got to look across the spectrum. But I would say that when it comes to new technologies, we really need to have public-private partnerships and have the government help fund that.
Yeah, 100%. And I mean, we've seen this in the renewable industry, right? At the beginning in the renewable industry, there were grants, there were government-driven investments that allowed for us to be able to really uptake the project development pipeline. And so I think it will take the same kind of support to be able to get there on new technologies.
And so we've heard about needing a proven management team. You got to have the talent. You need to have collaboration, I think is what I just heard of those last two answers, and public-private partnerships. Thania and Vann, you guys look at projects on a global basis. Are there some other factors or things that you see in business plans elsewhere that either are kind of a big turnoff to the investor groups you're talking to, or things that really attract you and those investors, beyond maybe the private, but the proven management teams?
Sure. Yeah, so I think that when we're speaking to investors, as I mentioned, it's all about de-risking the project. A lot of it comes from site control, right? Having the accessible land where the resources, which obviously is here, and then also having a proven contractor that will build the project on time and on budget. That's really what we look for. Also, obviously, once again, going back to the permitting issue, right? The relationship that exists with the county in order to get permitting done on a timely manner to keep the project within budget and on time is very important for us. And I think those are really the major risk factors that I look at. And lately, obviously, the supply chain issues, right? We want to make sure that people have procurement in place. And I think those are really the main items that I would say I would look at in a business plan to make sure that it's viable.
Yeah, I mean, I think Thania covered it. I would say what's important for us with the BGTF fund is strong, stable cash flows over a long period of time. I will say within CCS, the government incentives actually help with the investment opportunity. And so as we look globally, a lot of those incentives don't exist. So we really do have an opportunity here, both regionally within the state and nationally, frankly, to really put a lot of capital to work.
One thing I'd add is the best way to de-risk a project is to have oil. And so you've got proven reserves in the billions of barrels in this state. And that's a great way. You see ICAV bought Era. That's a renewable energy company that's going to pay off their purchase at $42,000 a flowing barrel in 2 years maybe at these prices. So there's a tremendous opportunity if we do collaborate and we say, hey, you've got so much oil in place here that you can de-risk your project by producing what's right under your feet, and then integrating that with surface facilities, solar, battery, using the reservoir as a storage mechanism, which you don't have to build an oil reservoir, but it contains heat, it contains fluid. We know that because there's oil there. So I think that's where this all kind of comes back together, is you can totally de-risk a project if we have support from regulators and from Sacramento, recognizing that there's value, that we should not just shut that off in the ground. We need to embrace everything.
All right, and so the common theme, of course, is de-risking it, right? Investors want to have a reasonable certainty of getting a return. And in the bond markets, right, we have credit ratings, right? You can be, AAA rated. There's only a few of those left, and then on down on the rating scale. So are there any independent kind of third-party certifications or stamps of approval like that around the renewable space that you find investors are starting to gravitate towards as sort of that seal of approval, that gold standard? I'll start here with Vann.
There are companies that are now, we call it IMM, it's impact measurement and monitoring. And there are companies that are now certified. CARB has, I believe, 31 entities that are now certified to do that measurement. So, and that'll become important because you want to avoid what we call in the industry greenwashing, which is suggesting that you are green and carbon neutral or reducing carbon, but you're really not. So you'll continue to see this kind of IMM focus, certainly by the funds, but we will also need it from industry so that we have partnerships that really are leading to the transition to net zero.
As far as third-party consultants that work at a, I guess I would say at a project level, I think that we rely heavily on independent engineers. I'm sure you guys do as well, in order to review the project both on the engineering side and the commercial side and make sure that everything is in line with what the investor is expecting. And so I think as far as third parties and how key they are, I think an independent engineer is probably the most key party for my purposes and on the project side.
The only thing I would add, and I guess it's not a third party, but I guess it is, but operators, regardless, oil, renewables, should be more comfortable publishing their data because and furnishing studies through universities in the state, perhaps, that can get the data out to the public, because if operators don't do it, an environmental justice group is going to do it for you, and that might be skewed in a way that's not in your favor.
And so we'll pick up on that, and let's talk about community. Again, you've seen lots of projects all around the country and all around the world. Can you share an example or two of a project where the investor group and the operator, the owner of the project, really did a good and legitimate and a real job of engaging community, and so that the community got a benefit out of it just beyond those investment dollars?
Gosh, I mean, I think of just right here in Kern County, the community and the benefit we get from oil and gas projects is amazing. $200 million a year in property taxes from oil and gas production, and funding our fire department, police, teachers, everybody. I think it's underappreciated, but it's about to be greatly appreciated as we potentially see a recession and as that money starts to disappear. So I think that's the best way to look at it that I see.
I think it's the same on the renewable side, right? We strive to be able to have those partnerships with the communities that we come into. So whether it's through donations or supporting the labor force or anything that has to do with community support, we're very focused on that. When we come in to do a project, we're not only thinking about the construction aspect of that, but we're going to be long-term partners. And so it makes a big difference for us to be very close to the community and be able to provide those funds where they are, where we're capable to do so.
Yeah, I would just say, from Brookfield's perspective, listen, we think globally, we act locally, and so it is all about supporting local communities. I think every project we do, there's a host of community benefits, whether it's landowner payments, tax payments, property tax payments, things that we do in the community. And now with the IRA and the prevailing wage and apprenticeship obligations that exist there, that's only going to help in the communities as well, and we look forward to doing that.
All right, and so as we think about, someone said something earlier about, investment in projects sort of attract other projects and you get this critical mass. I would describe that as a multiplier effect. And Kern County is ready for another multiplier effect or inflection point moment. If you were to think about what would be that next thing that helps us really change the trajectory and the growth curve, does it come back to the regulatory and the de-risking? Is that still the answer, or is it technology? Is it having the sandbox at our carbon management business park? If we had to say the number one thing we need to ignite this, what might it be that would really get investors excited and that would help Kern County stand out from other regions that are doing similar things? We're not the only ones doing this, so.
I think it starts with leadership. I think Lorelei provides such a great example of an agency that is proactive, and we need Lorelei's at CalGEM and the Water Board because these projects go through those agencies. And so investors need to see that. They will gain confidence if they're on a call with Lorelei. They will read the LA Times and say, wait, CalGEM's director just said he cannot, in good conscience, issue a permit for a new well of any kind. Does that mean a carbon sequestration well? Does that mean an oil well? That's very opaque. And so investors do not like that. So we need stronger leadership at those other agencies. We also need to, I think, taking maybe a happier note, the whole west side is an opportunity. Investors get that. The amount of reservoir space, the amount of surface, you're away from communities, you're in the most prolific basin on a oil per acre basis in the country. It is amazing what we have beneath our feet. And so it's super exciting to hear the carbon management park and the potential to integrate all of these technologies in this already proven asset. And that's what investors want. They want something that's proven, they want good leadership, and they want to know that their dollars are not just going to be wasted in this permitting churn forever.
So I guess that Mike said it beautifully, right? It goes back to regulatory and permitting timelines and security. And so I agree 100%. I think that leadership is important. And yeah, I think that gives investors security. And once again, going back to the de-risking of projects, right?
Yeah, I would just add, the partnership that we've set up with CRC is something that we hope to replicate throughout the energy transition economy. You find a partner that's got the operational expertise for whatever you want to do, and you do it on a programmatic way, and that is going to accelerate how we get these newer technologies to help us with that transition to net zero.
And so last kind of closing question then, can we help be a matchmaker? Because you said you got to find those partners. I think what we're doing today has the potential to do that and has done it. Can we do more of it? And maybe specifically, and very selfishly for Lorelei and myself, how many of your investors in your fund actually will get on a plane and come look at a region as part of their due diligence? Or are they just totally entrusting that to you and writing really, really big checks? And there's probably some of both, I would guess.
Well, yeah, luckily for us, there is a little of both because we do need their trust to be out there in the forefront. But listen, our investors love to get on the ground. We just hosted an investor meeting at one of our largest wind farms in the country. We'd love to do that here in Kern County. And so you'll see them come out probably more readily than you might want them here. So we'll get them here.
We will welcome them, and Lorelei and I will be serving the drinks at the bar afterwards. And with that, I want to thank our panel, and we look forward to inviting investors that you have relationships with here to Kern County and Bakersfield so that we can be part of this energy transformation. Let's give a warm round of applause for our panel.
Thank you.